Good evening, everyone. Time for another silver update. This is a US dollar Chinese yuan crossed over the US dollar Ukrainian currency provided by netdania.com. Very interesting chart. I've covered before how the Ukrainian currency had stabilized with the loan guarantee that Russia had made, and then when the revolution started, of course, the currency started to weaken. Then with the latest things, it has started to weaken again. We see that when we go out to, let's say, about the 8-hour chart here. Actually, we'll take it out to the daily. So you can see the top there was about 6.5 to 1, but it spiked up again. It's spiking up now. But also this very interesting move in the Chinese currency. So the Chinese yuan is actually weakening against the dollar as well. Very interesting that both of these are happening at the same time. Same thing in the Russian ruble. So it appears that there is some type of global alignment or realignment happening. I'm not going to speculate as to what's behind that. Just happened to come across someone mentioning today that the latest Tom Clancy novel supposedly indicates that there was an invasion of Crimea by Russia, a splitting of the Ukraine, and then ultimately a attempt to reacquire the rest of the Eastern Bloc states by Russia. So kind of interesting. This is right before his death last December. So let's get to some of the topics of the night, and it's going to be mainly about inflation and what's coming. Now, I want to show you what's going on in Venezuela. Venezuela is kind of taking a page out of the U.S. playbook, which is to not really admit what's going on. But you can see the headline, Venezuela Bolivar devalues 89% in the start of new FX market. Venezuela's exchange rate is a Gordian knot of rules and regulations meant to baffle onlookers. Sounds like U.S. government statistics. With BS, and we suspect hide the hyperinflation from prying eyes just a little longer. Today's launch of SICAD 2, a new currency market which allows the free market to bid for U.S. dollars in bolivars, appears to be an effort to provide liquidity to a black market for dollars. SICAD 2 priced at 55 bolivars. You can see the official exchange rate is 6.2. That's an 89% devaluation of the official rate of 6.29. Another auction-based rate, SICAD 1, applicable to some firms. Confused? You should be. The bottom line is that Maduro and his cronies continue to suppress the reality of a hyperinflating currency as student marches grow ever more popular and outspoken. So there's what's going on. It's clear that the Maduro government is collapsing. They have, as the saying goes, they've run out of other people's money. And I've covered the craziness of sending in troops to department stores and stuff like that. So this socialist nutcase, Maduro, is not going to be in power very much longer with the type of craziness that he's doing. But just to show you that this is nothing new, and this is something that someone linked on Zero Hedge, I want to take you back to a speech that was given by Franklin Delano Roosevelt in Madison Square Garden on October 31st, 1936. And this is Roosevelt pushing for his unemployment and Social Security programs. And I want to read to you his comments down here. Very, very interesting. Now he's talking about how the employer will actually be the one who pays for this system, and it's not going to have a big impact. He's trying to convince the voters. So he says, every message in a pay envelope, even if it's the truth, is a command to vote according to the will of the employer. But this propaganda is worse. It is deceit. They tell the worker his wage will be reduced by a contribution to some vague form of old age insurance. They carefully conceal from him the fact that for every dollar of premium he pays for that insurance, the employer pays another dollar. That omission is deceit. Here you have the free lunch crowd here thinking that, oh, we'll just make the employer pay for it, therefore it's free. They carefully conceal from him the fact that under federal law he receives another insurance policy to help him if he loses his job, and that the premium of that policy is paid 100% by the employer. Of course, we know that his wages are reduced by that much, and not 1 cent by the worker. They do not tell him that the insurance policy that is bought for him is far more favorable to him than any policy that any private insurance company could afford to issue. Sound familiar with this latest Myra thing? That omission is deceit. They imply to him that he pays all the costs of both forms of insurance. They carefully conceal from him the fact that for every dollar put up by him, his employer puts up $3, 3 for 1, and that omission is deceit. But they are guilty of more than deceit when they imply that the reserves thus created against both these policies will be stolen by some future Congress. Now you tell me, was the Social Security Trust Fund and the reserves created by these government programs, were they stolen by some future Congress? This is what Roosevelt has to say. Diverted to some wholly foreign purpose, they attack the integrity and honor of the American government itself. Those who suggest that are already aliens to the spirit of American democracy. Let them emigrate and try their lot under some foreign flag in which they have more confidence. So there's the rhetoric, the nonsense of FDR. And of course, he's long dead. So no one can come up to him and say, told you so, you were wrong, you lied. And he did. He was wrong and he lied. So the money has been looted, it's been stolen. You can't trust these politicians just from the past, just like you can't trust these socialists of today. Now let's look at some charts here. I want to show you some charts that are from more research, free charts, and I've watched these for a long time. These charts go back to the beginning of the major commodity bull boom that happened in the early 70s. So 1974. I picked this chart here because in the past this was very type of example of what all the charts look like. In other words, what we had from the 70s all the way forward was fluctuating prices. We had big spikes, and of course that's supply and demand, and it's especially true amongst crops because you have weather patterns and droughts and shortages and things like that. So this is a very normal type of pattern that you can see has continued for 4 decades, and pretty stable sort of pattern, just the occasional spike and then back down to that mean, which is roughly where it was all the way back in 1970. Now that's the one chart that still looks like that. Now let me show you some of these other charts here just to give you an idea of how this is changing in a secular trend. So let's look at the lean hogs. Now you can see here, here's the top, here's the spike all the way up here. You can see that high, 126. Okay, that is a high that was not achieved during any of these spikes, and you can see the fluctuation was hogs going all the way down to 20 to 30, all the way up to 80 to 90 for roughly 40 years, give or take. Back and forth between those prices until now. And now you can see, and keep in mind the financial crisis, because the financial crisis was back here in '08. And this is the bottom right there after the financial crisis. But then we have something new. We have this secular bull market. This is hinting at a coming inflation. Let's look at live cattle. Same sort of thing in live cattle. Now we did get a first new spike into new highs back in 2004, but quickly fell off and had a low below 80, which you can see was reached all the way back in 1978. But then it simply took off. We're talking about prices that we've never seen before. Again, this is a new move. This is a secular bull move. This is not going to come back to the traditional price ranges. This is oats. Now you can see that if this spike would have turned and gone down, we could argue that we'd still be in that long period where prices fluctuate. But you can see the oats price was slowly building. It made a bottom there again after the financial crisis, but then slowly began to stabilize here at the old highs. That type of stability was followed by a blast off here, and now we're moving into new territory. So that is portending some type of inflation coming down the line. Now, there's a lot of them that haven't done this, but there are also a lot of them that are doing this. Now, of course, the crude oil is the one price that has not reached that pre-crash high, and you can see the huge move that we had, 150 all the way down to 30. So an enormous drop in the price of oil, and then coming up and stabilizing at about the halfway point between those two. And because oil hasn't made new highs yet, that has an effect on things like the CRB index. So you can see, though, that the CRB index is now starting to flirt with stabilizing at new all-time highs. And again, here's this long period of consolidation. So even though the financial crisis took it down from about above 600 to almost 300, nearly cut in half, after that it rallied and actually went into new highs. Same thing with the other commodities index is the Goldman Cash Index. These are built a little bit differently. Now you can see, if you look at this chart, it seems pretty clear that oil has had a very large impact. Oil must be a very large, have a large percentage of how this index is calculated. But this index appears to be moving in a secular bull trend. It does not appear to be returning back to the old areas, and that is confirmed by this consolidation at these new high areas. Now I want to take you over to some of the financials here. Let's start off with the Dow Jones Transportation Index. And you can see here that the move since the financial crisis is actually quite large. It's not large percentage-wise, but it is large in the chart. So much so that the Dow Transports actually looks like it's beginning to recover a parabolic pattern. Now, if you remember with Maduro and what he's doing in Venezuela, the Venezuelan stock market, of course, is still going crazy and probably will have some spike to infinity. We saw the same thing happen in Weimar, Germany, but again, in a hyperinflation, it doesn't really mean a lot if your stocks are worth gazillions of dollars, but a gazillion dollars won't buy you a loaf of bread. So that's what I believe we're beginning to look at. Now, it's absolutely shocking that we're not seeing the precious metals react to this. We have two things. We have potential crisis going on in the world, and you can see gold is still selling off at around 1312. And we also have potential inflation and hyperinflation right around the corner. And of course, here we are selling off in silver, challenging that 20 and getting below that 20 price again. So you've been given the longest time to prepare. I think we're a number of years behind Maduro down there, but we're following along the same path. And of course, when that happens, you can have a 90% devaluation overnight. And we'll talk to you next time.